Hello, everybody. My name is Alesh Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is the weekly show of my thoughts on market happenings for the week ending July 30th, 2021. The Canadian market and indexes are up for the week. All three of the US indexes are down. Emerging markets MSCI EFI index is up 1.5%. So for those of you diversified all over the world, you've had a decent week. Oil is up 2.5%, which is good for Canada and the Canadian dollar, as well as oil energy stocks, which have had a tough time of it lately. So one of the first topics I wanted to discuss is inflation. So it seems to be raising its ugly head, causing input costs of companies to increase, including wages and salaries. Central banks, which are targeting inflation rates to be around 2%, could decide to start raising interest rates to slow down the economy and get us out from the record low interest rates that we've had and enjoyed for the last several years. So, what to do about the coming inflation? Well, you know me, I'm always for investing in stocks because if you get healthy returns in stocks, it will outperform inflation very easily, thereby preserving most of your purchasing power. But there's a few other assets that people will sometimes go to. So, commodities is one, real estate, and then gold. So commodities are relatively inelastic in their demand, so price increases do little to affect the amount of consumption. For real estate, you can go with REITs or real estate investment trusts, which are an easy liquid way to get into real estate, and real estate tends to be inflation resistant. Physical assets like real estate often continue to grow above the rate of inflation. The other interesting thing about real estate is that if you have loans to purchase the property and they're at a fixed rate, then the inflation erodes the cost of the repayment over time. Of course, if you're on variable rate, then that will go up as the central banks increase interest rates. If you're going to be getting into real estate in some form, focus on inelastic areas like residential real estate. People will always need a place to live. The third counter to inflation would be gold. Now, I've also read that gold may not be the best hedge for inflation, but as the government is quote unquote printing money, uh, investors become worried about credit worthiness of the government, and then they will move to gold during unstable times in the market. So it becomes a self-fulfilling prophecy where gold goes up because people think that they should be in gold and they're afraid. Gold is sort of a fear index. Uh, the commodities, gold not so much, silver quite a bit more, is a primary input in many manufacturing cycles, and therefore there's no good replacement. That again is making their prices inelastic. Ultimately, you want to be investing in solid companies with a wide moat and pricing power that can pass on the increased input cost to their customers, while the weak companies with no moat and no competitive advantage are not going to be able to do that. So, is the inflation that's worrying the markets temporary, or is it here to stay? Well, so far the central banks seem to think that it is temporary, and so they don't seem to want to raise interest rates at this point. However, if they do start hiking the rates, then the higher interest rates will be a drag on the market performance because most companies have some sort of debt, which they will now be paying more for, and not go straight to the bottom line. So that could cause a market correction and also a vigorous reaction in the bond market. So keep an eye out for that, because that could come fairly quickly when investors realize that there's a problem with inflation. We've been in a inflation-free environment for a very long time and a very low interest rate environment, and that has led to unsurpassed growth. But as soon as interest rates are going up, there is going to be quite a bit of volatility in the markets. After inflation, the other big story has been China and Chinese companies. So this is multifaceted, and it's in a larger scheme of China and the US competing. But what has been happening this past week is that China has started going after educational companies, uh, which have been regulated heavily all of a sudden. And this is supposedly to lower costs for parents so they can have more children, which is sort of a reversal of the one-child policy, which had been in China for a very long time to keep the population down. We also have technology companies getting fined for being monopolies, and this is politically seen as the government going after rich people so as to make things better for the majority of the population, which is poor people. I believe that the Chinese government actually has no intention of harming these figureheads and companies that they have, because that would be harmful to China in general. So I think it's just a little bit of saber rattling, and investors are taking it quite seriously, and the prices in the major Chinese companies that trade in the US have gotten hit quite hard. I believe they're going to come back, and I am an investor in these companies, and I plan to buy more when I can. So it's something to keep an eye on, but I don't think it's going to be a significant issue in the long run, and it'll slowly be forgotten about until the Chinese government wants to send another message. The third item that's on my list is the Delta variant of COVID-19, increasing the number of cases of COVID in North America. There is a worry, of course, of another recession and another lockdown. Now, keep in mind, it's not COVID that causes the recession, it's the lockdowns. And unlike the previous time that we were locked down, I think this is going to be different, because now the vaccine's available, and the whole attitude of we're all in this together was happening before the vaccine. And that's when everybody said, okay, we have to stop this and we have to stay home. But now that the vaccine is available, and it's the unvaccinated people who are getting hit by the Delta variant, I think the vaccinated people are going to have a very low tolerance for people who are getting COVID because they're not vaccinated. Because the vaccinated have a very low risk of Delta, and so they're going to refuse to get locked down to protect those that chose willingly not to get vaccinated. So I don't think the lockdowns are going to happen, just because people would really be pushing back on that now, because there is an alternative. Uh, and then the next item is that this past week there have been a lot of strong reports and earnings in the quarterly reporting. Uh, Technology especially has done really well in the US, and earnings have been going gangbusters in the US. So that's been a lot of good news. Interestingly enough, that didn't really cause a lot of the stocks of those companies to go up, uh, because sometimes these returns and these increases in revenues and profits were so great that investors are thinking this is not something that can be maintained. So I think they didn't really give the companies the credit that they deserve. So maybe some of these companies are now ripe for purchasing. Depends on your outlook on these things. So to summarize, the markets are sort of near their all-time highs, both in Canada and the US, and the markets are not really sure which way to go. They might still be a bit frothy, maybe if not fairly priced, maybe even a little bit overpriced. And despite the great numbers that the quarterly reports put out, not much movement has happened, and in fact, the U.S. Indexes have gone down, as I had previously mentioned. So I'm expecting volatility next week. It's a bit of a cop-out. If nobody knows which way to go, then it's going to go up one day, down the next day, up and down. So you're going to have pretty much a flat market. So something to look forward to, maybe some buying opportunities next week as well. So if you have any requests on what you'd like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.